What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So we've had a pretty wild day so far in the ape community. We've had some very interesting updates given to us by Ortex, which we're going to cover. We're going to be briefly touching upon this max pain price and how it could potentially get stepped up going over the next couple of weeks, which could end up boosting us up over the next couple of weeks as well, which I think is very interesting. And with the price action that we've seen on AMC today and the volume that we've seen in terms of contracts traded at the near to the money strike prices on AMC today, it is possible that we do see a little bit of a gamma squeeze going into the end of this week. Now, is this gamma squeeze going to be to the magnitude that we saw back in June? Well, we're going to be taking a look at that open interest and where these contracts are concentrated and give an unbiased opinion as to what we could potentially see in terms of that delta hedging. Now, we also have institutions piling into AMC in the third quarter. We're just getting a lot of these reports now, and I wish we could see these reports and purchases as they were being made, but the way that our reporting system is set up, it is incredibly delayed. So the fact that we're seeing all of these institutional purchases in large amounts, it's very, very bullish, guys. A lot of people like to come out and say that when we talk about these institutional purchases, that they're just lending out the shares, or they could be buying the shares to sell into the squeeze in order to limit it. Well, going off of that second point, that doesn't make a whole lot of sense. We know that Wall Street is very, very money hungry. They want to make the most money that they can. So if the price is going to keep going up and they see the price is going to continue going up, they're going to hold their position and try to get the most out of that position. And when we take a look at those cost to borrow rates, it makes no sense for these institutions to be buying AMC shares right now for the sole purpose of lending them out. Now, the last thing that we need to go over is one of the most wild things that I have seen in the market. We have on the level 2 order book, the bid prices being higher than the ask prices. When you think about the supply and demand metrics of how the market works, the bid prices should never be higher than the ask prices, because if they were, then all of those ask orders that supply coming in would just get wiped out. But we actually have a very logical explanation from this coming from Dave Lauer. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So right now, AMC is trading at $42.84, up $2.85 on the day, up 7.1%. This is an absolutely awesome way to start off the week and is right in line with what we've seen in the past after AMC reports its earnings. Now, coming over to Ortex, we're seeing the estimated short interest at 16.43%, but the utilization has fallen significantly. Now, for those of you guys who don't have a good grasp on utilization yet, utilization is just the amount of shares that institutions are willing to lend versus the amount of shares that have already gone out on loan. Now, when we're thinking about exactly what's going on here, well, the amount of shares that have gone out on loan in terms of Ortex's estimates has been steadily decreasing, but according to the exchange reported data over the last couple of weeks, we've actually seen the exchange reported short interest start to go up. So we do have to take Ortex data with a grain of salt, but it does provide us some good insight into where we're at in terms of the short squeeze side of this investment. And honestly, it's the best data that we have. So coming over to this max pain price here, again, we're seeing the max pain at $40 a share going into the end of this week, and that is going to be the price that the most amount of options contracts will expire worthless or out of the money, benefiting market makers, not options buyers or whoever is selling these options. But something very important that I want to keep bringing up and make sure everybody understands is the furthest out of the money strike going into the end of this week is $95. So we're going to see a heavy concentration, as we can see here, at the furthest out of the money strikes. But going into the December monthly options expiration date, the furthest out of the money strike goes to 145. So the concentration of these contracts is most likely going to shift out to that 145 as well. So if the market makers need to pin the price, it is most likely going to be at a higher price. And we can already see that being reflected in the max pain price for this December expiration date. It's already at 41, and we could see that increase over the next couple of weeks as well. Now, coming over and taking a look at Stonko Tracker and really thinking through this gamma squeeze situation, we only have 196,000 contracts out of the money and 43,000 contracts in the money. Back in June, we saw over 200,000 contracts concentrated on that $40 strike. So is it possible that we see a little bit of delta hedging this week and we get pushed to the upside? Yes, but is it going to be to the magnitude that we saw back in June? Most likely not, but there is a silver lining. Remember, we are looking at this January monthly options expiration date, and we're already seeing massive pileups. So if we don't end up running to crazy high numbers this week, remember, there is a light at the end of the tunnel, and there's always going to be opportunities for us to see these big price run-ups because honestly, until the shorts cover, we are going to continue putting pressure on these institutions. Now, coming over to AMC's options chain, I do want to show you guys one specific thing going into tomorrow. So when we look at the volume of contracts traded today, it's going to be very interesting to see if these contracts, this is a lot of volume here, gets factored over into this open interest. So volume is just the amount of contracts that are being traded, and open interest is essentially the amount of contracts that are being held. If all of these contracts right here, these strike prices, really start to step up in number and the amount of contracts that are being held, then that's more hedging that these institutions are going to need to do, hence more buying volume. So when we look at the puts, we don't see anywhere near that type of volume or even open interest. So a lot of money is being bet on AMC going to the upside this week. Now, taking a look at Market Beat here, we have $706 million of AMC bought and a measly $4.5 million of AMC that has been sold. This is very bullish. Institutions have been buying AMC since before the June run-up and have continued to add to their position after the June run-up. This is very bullish, and when you think about what the price action has been like on AMC, we saw it run all the way up to 77 and then back down to the levels that we are currently at. If the institutions are still buying, they obviously see that it has a lot more potential to go much higher than that $70 range. So I think that is definitely something that we need to keep in mind. Now, the last thing that I really want to cover in this update is this situation right here, unraveling with the order book. So when we're thinking about level 2 data and the data that we're receiving, it's always possible for our data to either be messed with or be flawed. When we take a look right here, we see the bid price is $42.53, but the ask price is $42.37. The bid price is higher than the ask price. That doesn't make a whole lot of sense. If this was actually what was going on, this 200 share order would wipe out this 202 share order, leaving 2 shares remaining, and we would just continue stepping down or up in price, because the buyers are outweighing the sellers and are willing to buy at higher prices and in higher amounts. But Dave Lauer does have a logical explanation for this. That's called a crossed market. It is not allowed during regular market hours. If this was seen at that time, then it's bad data, exactly what we'll be solving with Irvin Terminal. Now, this then brings us to a conversation about data and market transparency. One of the key fights that the ape community has taken on is making our markets more fair, more transparent, and honestly, so that retail investors can succeed and get a seat at the table to play in this market in a free and fair way. Retail investors are not stupid. We are not dumb money. Yes, there are going to be some people that are going to make stupid bets sometimes, but that does not mean that those individuals are stupid. A lot of people, especially over this last year, have gained the ability and learned how to interpret a lot of the data that we are receiving from a lot of these different data sources. But how are we supposed to make good decisions if sometimes the data that we are seeing is absolutely flawed and these institutions are actually getting the real data? That is not a fair thing that we need to deal with, and is something that we hope to really accomplish and solve over the next couple of weeks, months, maybe even years while we are fighting for this cause. Now, I know that even after Dave Lauer has provided this logical explanation for exactly what's going on with this order book discrepancy, a lot of people are going to be saying, no, this is a result of market manipulation, and it is possible. We don't necessarily know for sure what's going on here, but we do have a very logical explanation from Dave Lauer that is explaining what's going on here. It's a cross market, not allowed during regular market hours. But at the same time, it is always possible that something is going on behind the scenes. So we're going to have to wait and see if we get some more proof that this is not supposed to be happening. It's not the result of a cross market. Then there is definitely something else at play here. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.